Good morning, everyone. My name is Dan Matusiewicz. I'm joined here with Jenny Leisz. I was fortunate enough that she agreed to assist me with this presentation. This is the last in the webinar series, and it's an agency profile on investment accounting and reporting. So I will explicitly address that we will not be focusing on the technical GASB requirements, but we will focus on really some of the practical considerations of day-to-day accounting and financial reporting, depending on your situation in your agency. We realize that no two investment agencies are alike, and I think Jenny and I have been in two different really scenarios. At City of Tustin, they manage their own investments, and early on in her career, they were managing the investments without investment accounting software. And now still does in-house investing, but using they leverage their use of investment accounting software. And with the City of Newport Beach, we've used an outside investment advisor for since the early 90s. And for a long part of that time, we didn't have investment accounting software where we relied on the investment advisor reports, but we have gravitated towards using both an investment advisor and accounting software, and we'll speak to some of those pros and cons as we go through this presentation. So agency one, again, this is the agency that manages their investments in-house, but without accounting software. And the problem, I think, there's no right answer, but what we both realize is that these homegrown processes sometimes lack the robustness of information that you would receive through an accounting software service. And it also, leads your agency to the potential of being vulnerable to error and a single point of failure if the one person that knew how to put it together in Excel leaves your agency. You're starting from scratch. We know that Excel has limitations about the level of reporting that you may be able to do, either performance reporting, how you're doing relative, are you in compliance with your investment policy? Do you get any risk analytics? The reconciliation process is different. So I think both Jenny and I are big proponents of using, no matter what situation you're in, we are proponents of using investment accounting software. I think it increases, your transparency and the analytics that you use. So, please do consider automation opportunities. It used to be that the accounting software was expensive, and it still required a lot of manual processes. But if you haven't been in the market for a while, there have been significant strides in the level of automation, and by focusing less on the input, the automated efforts could save you a lot of time and eliminate some of the control deficiencies that you might have. So where you get this additional service isn't necessarily all coming from your software provider. There are some of those services that actually use or services that you can actually get from your custody bank. And I think some of those automation opportunities are sometimes overlooked. And then you can have software systems that you can buy additional services on an a la carte basis And this happens to be the software that Jenny uses. Jenny, can you speak to which a la carte services that you use, and why you if you chose to do it manually, why how did you make that decision?
Thank you, Dan. The City of Tustin has been using investment accounting software for the last several years. And prior to that, our processes looked much like the Agency 1 scenario that you just talked about in the previous slides. We researched and reviewed several different software options and chose to go with a basic subscription service that provides market price import and enhanced reporting. And the software that we decided to go with is called Tracker. And prior to using Tracker, the investment accounting software, our processes were painstakingly manual. We would actually take the paper custody statement that comes in every month and the trade tickets from the investment purchases that we had done and go through to verify trades. And the investment report was simply an Excel spreadsheet. It was very basic. And we would have to insert lines for new purchases, delete lines if we sold something, very manual. And using Tracker has been a huge time saver for us, and it results in a higher degree of accuracy. And the other feature that I really like about investment accounting software is it gives us the ability to actually verify our interest calculations every month. By running a simple tool in Tracker, there's a reconciliation process that recalculates the interest that you should be receiving each month, and you can check that off and make sure that's what you received. We weren't able to do anything close to that with the manual process we had in place previously. Next slide, please. Just as background about the City of Tustin before we go any further, our portfolio is about $130 million, and we are highly liquid at the present time due to some significant obligations that we have for construction projects, mostly at the Tustin Legacy Development, which is happening at the former Marine base within the City of Tustin. And I had to include a snapshot that I took a couple of years ago with my cell phone of the inside of one of the legendary hangars at the former Marine base. And you can see there the Goodyear blimp. I believe that these wooden structures are the largest in the United States. So now back to investment accounting and reporting. We are organized at the city with quarterly reporting to the City Council, and our investment reports quarterly are posted on our city website. If you'd like to take a look at an example of an investment report, you can go to tustinca.org, look under the finance department, and pull up a basic investment report. Prior to submitting those to council, we do a quarterly review with our audit commission, which is an appointed citizen commission, and one of their tasks is to ensure that we are in compliance with the council's adopted investment policy. And on a monthly basis, we meet with an investment subcommittee, which consists of 2 members of the audit commission. Now, what I want to do in the next few slides is walk you through an actual real-life purchase of an investment. And in doing so, I can show you quickly the daily, monthly, and then quarterly and annual processes that are involved. Our actual investment report is put together by the accountant in our department, and I would say we spend on average about a day a month reconciling and putting everything together. Data is uploaded from our general ledger system, from the Tracker investment software, and also from our bank. And we have one data page in an Excel workbook where all that data is uploaded, and then it automatically updates all of the pages that go in our investment report. Next slide, please. So in February of 2019, I went back a ways to pick a really exciting corporate note that we purchased because the yield on it is 3%. It's hard to find anything like that these days. But we actually purchased this Toyota Motor Credit Corp. And there's a lot of detail on this. This trade ticket comes to us from our broker. Face value of $1 million. It's got the price we actually paid there, which is $1,034,000. The yield, 3%, settlement date, and we also paid some accrued interest. So this has much of the information that we need to input into our investment accounting software. So it's a source document for us. Next slide, please. This is a snapshot of the Bloomberg screen that comes along with the trade ticket and some other information that we get from the broker. In the red box there, you can see the bond ratings from the three major agencies for this purchase, which is an important piece of information that we need. It's got the maturity date, the CUSIP number. And again, remember monthly, after you enter all this data in Tracker, we're able to calculate and verify the interest received for all of our securities. Next slide, please. So what do we need to do on a monthly basis for accounting? Well, at our city, we pool all of our cash into one general ledger object account that crosses all funds. And we probably have 60 or 70 funds that we are tracking right now. This makes the accounting much easier because we don't have to make journal entries for transfers between bank and investment accounts. We only need to record the monthly interest. And how do we make sure all of this is accurate? Well, the monthly statements get for each of our investment pools, like Leisz and CAFR, the California Asset Management Program, the Orange County Investment Pool, and then also we get a custody statement for all our securities. We reconcile those statements with our Tracker accounting software investment reports and also our general ledger pool cash account. And this slide just shows a summary of the activity for the month, totaling up to our total investment interest, which is just over $350,000. And then there's also listed any buys, calls, or sales that occurred during the month. And you can see in the red box there, towards the right, the corporate bond, we bought that Toyota Motor Credit. And then there's the journal entry. We're going to debit cash for our interest income, and we're going to credit interest income for the $350,000. Now, another feature that you might want to look into, we have a unique feature in Springbrook that will automatically allocate interest income amongst all the funds, which is a real time saver. You don't have to prepare a journal entry. So you simply need to enter the total interest income, that $350,000, and then Springbrook will allocate that and prepare the journal entry based on the month-end cash balance. Next slide, please. Now, these next few slides we'll go through fairly quickly. I just included a few charts and graphs that we include in our monthly investment report. This is a summary of investments with total percentage by type of investment. Next slide. And one of the things that we're required to provide in our investment report is a statement that there's enough funds to meet the city's anticipated cash flow needs for at least the next 6 months. So we include a chart that shows what our maturities look like for our portfolio. Next slide. On a quarterly basis, we're required to have a certified page in our investment report with a package that goes to our city council. And this certification page is actually signed off by the chair of our audit commission and also our city treasurer. And they're attesting that we actually have 12 months estimated expenditures available in reserves. So at this point in time, we're actually making sure that we have cash reserves on hand that's more conservative than what's required by our investment policy, the 12 months versus the 6 months. And how do we do this? How do we make sure that we have enough cash on hand to meet those kinds of expenses? Well, we have a management analyst in our department that puts together a 12-month and a 24-month cash flow projection periodically. That's reviewed by our department heads and also our city treasurer and finance director, and to make sure that they agree on the assumptions that are part of that forecast. So we have a picture of what we think we're going to need over the next 12 to 24 months. Next slide, please. This chart shows our average portfolio yield and reflects historical rates of returns that are required to be reported. This shows 3 years. and also the current treasury yield that most closely matches our average portfolio life. Next slide. This chart shows the current book value of our portfolio and also the current market value. And you can see that difference there. We actually have an unrealized gain in our portfolio right now, just over $1 million. And per our city's investment policy that's approved by council, one of our goals as a city is to enhance the economic status of the city while protecting its pooled cash. So this is it demonstrates that we are in fact meeting that goal. Next slide. This chart shows the ratings of all of our corporate bonds. And there in the red box, you can see that Toyota Motor Credit Corp that we purchased back in February of 2019. The investment policy indicates that our corporate bonds at settlement date are required to have an A rating or better. So there's a column in the chart there, rating at settlement date, and those are in fact all over and that A rating benchmark. And so we say that they are in compliance in the far right column. Next slide, please. This is an example of the report produced by our investment accounting software. And again, in the red box, you can see that Toyota Motor Credit Corp note. The reporting provided by Tracker also gives us subtotals by different asset classes. So you can see for our corporate notes, the limitation on that in our investment policy is 15%. So at the time of purchase, we need to make sure that we don't have more than 15% of our portfolio invested in corporate bonds. And if you go over to the far right column, you can see right now we're at just over 14. So we're probably not going to be in the market for corporate bonds right now. And next slide, please. So what do we need to do annually for our investment accounting and reporting? Well, there's two major areas. There are a couple of journal entries that we need to make sure and make. And then there's also reporting required for our CAFR, our comprehensive annual financial report. Next slide. This is the supporting schedule for the journal entry to record the market value adjustment for the city's investments. And this simply takes the cost in the cost column, which is reconciled with our bank and custodial statements, and compares it with the market value. And the market value comes from our custodial statements for agencies, corporate bonds, money market, municipal bonds. And then the difference, that $1.5 million, is what we're going to record as our market value adjustment. Next slide, please. So we actually take that $1.5 million and then allocate it across all the funds. We should get a share of that based on the ending balance on June 30th, our fiscal year end date. And we're going to make an entry to debit the change in market value, which is an asset account, and then credit the unrealized gain on investments for each of the funds. And this next slide, this shows how we allocate the accrued interest receivable for the journal entry. And this is a very nice feature about having investment accounting software. We can simply run a report in Tracker, and it will give us a detailed listing by security of the interest receivable as of June 30th of 2020. And that is quite a labor-intensive task to handle if you're using a manual process to go through and figure out how many days interest you should accrue. And then we simply take that interest receivable and again allocate it amongst the funds based on their ending cash balance. And I just have a couple of quick slides left. Next slide, please. We're going to take a look quickly at the cash and investment footnotes that are required in the CAFR. This first one is a breakdown of the portfolio by remaining maturity. And you can see the first part of that schedule is produced for us by Tracker that investment accounting software. It provides us with a summary with the breakdown that we need by maturity for this schedule. We also have a couple of other sources of cash that we list here. We have a trust with PARS, the Public Agency Retirement System. And those are all 1 year or less. And then we also have some restricted cash with trustees for bonds and community facilities districts. So that's in the 1 year or less column as well. Next slide, please. And then this last slide shows a breakdown of the portfolio by the current rating as of the end of our fiscal year, June 30th. And this schedule, I actually prepare myself based on our investment report. So I take our investment report at June 30th, and then it's very easy for me to put together a quick Excel schedule to meet the requirements that we need to put in the CAFR. And this is the end of my part of the presentation about what we do at the city. I'm going to turn this back over to Dan now, who's going to continue our dialogue about investment accounting and reporting.
Thank you, Jenny. So Agency 3 is where we were a while ago, prior to 2010, where we had many portfolios, portfolio managers, and we did not have investment accounting software. So what that ended up leading us to is additional dependence on our investment advisor to even tell us whether we were in compliance with our software, help us out. We had to look to them to calculate performance and risk. So even though we have an investment advisor, we felt it was nice to have that additional independence. And it gave us more control and more rich information to ask intelligent questions of our investment advisor about their activity, as well as focus on strategy and tactics. So under our new model, we use Clearwater Analytics, which is probably one of the tier 1 type of investment accounting software. Has more bells and whistles, but it is more costly than some of the alternatives. But if you haven't been out to market for a while, again, I would encourage checking, because you may be surprised that the competition is growing and software is getting more inexpensive. But yeah, we view it as just a big upgrade in terms of the richness of our analytics. It automatically connects with our custody bank. So we're not replicating any transactions into an accounting system. Come in the morning and all the transactions from the previous day have already are recorded in our accounting system and reconciled. And then we, even if we have questions, we have additional support from the Clearwater team. So it's an area where you can save. You have some hard dollar savings as well as some soft dollar savings that we'll touch on later. So in our particular, we didn't follow this exactly, but our thought was to have our investment portfolios in different liquidity buckets. We generate our liquidity through our demand deposit account, local government investment pools, and then we have our targeted maturities. All these feed up, or at least the targeted maturities, through our custody bank, and then is reported into our accounting software. And as I said, we use Clearwater, but there are plenty of software out there that meets every agency's budget. The one thing that I would point out with the custody bank is it may be good to separate your strategies into different sub-accounts with your custody bank. So you can, if you are doing benchmark comparison, it's easier to segregate those transactions and those portfolios into those different strategies, and then compare the performance. And the software allows you to aggregate or disaggregate your portfolio to look at individual strategies or the portfolio on its own. So yeah, there's, as I mentioned, really some enhanced treasury reporting available when you're using different softwares. Our treasury reports are at this link. I will kind of zip through some of what we're able to accomplish with Clearwater Analytics. So as I said, we're able to aggregate multiple different portfolios into one summary report, including our bond portfolios and the individual series that we may be have issued. And we can take one segment of it and say the marketable securities for the short-term portfolio. We want to just look at that as the separate performance, and we can see the composition of that disaggregated portfolio, and then we can look at various risk analytics that come up relative to our portfolio holdings, and we can see how the credit rating is distributed. The duration is probably the single highest risk in any fixed income portfolio for local entities. So it's good to see where the duration risk is, as well as the issuer concentration if you're an entity that buys corporates. So a lot of rich information. Of course, as you get going, then you can do historical accounting of where we were liquidity-wise at June 30th of one year versus the next. You can get more sophisticated in your benchmark reporting. In our case, our core portfolio, which is managed essentially someplace between the 1 to 3 year Treasury index and the 1 to 3 year Treasury Gov Corp. So we're looking to fall someplace in between these two categories, but in instances where we fell short, we have some reasons to ask our investment advisor, why is that? Whether they fell short or they exceeded it, we would want to know answers why to both of those. But you can report to your a lot of transparency through your governing board. Index comparisons, I've kind of already mentioned, and this will show you the difference relative to one or more different indexes that you choose in your portfolio. I like to show when we talk about our returns relative to our benchmark, it's best suited in a total return scenario, and the total return that is something that elected sometimes have a hard time getting their head around. So we can show, hey, this is the income return, and then the price return that added on top of it to get to our total return of almost 4% in that particular year. So that having those those rich visuals helps your counsel and hopefully shorten some of your committee meetings as well. So policy compliance, the first thing that comes on my dashboard is, are we compliant or not? If it's not compliant, we can drill down and see which one of the policy rules that are lifted from our investment policy statement how we're doing relative to our rule and our limit, comparing the actual rule and the actual. So that's convenient. as well as the other feature, Jenny mentioned some of the, year-end CAFR footnotes. You can build this out and create custom fields so that if you were looking for time segmented reporting, you just, we would create a field for the market value and group securities by the types that we want to report out to in our CAFR. So it automates this process that in some cases you were gathering different statements, waiting to the end of the month, and just adding time to the process. So again, I think we mentioned that we're both proponents of automating the investment accounting software. I'm not going to go through each of these, but to those that say, well, it's expensive and we don't have some of the money that we need, there are significant soft dollar savings, including the transparency, the independence relative to your investment advisors, because your system, you can get a new investment advisor, but you haven't lost all of your previous analytics and performance, eliminates some of the error-prone processes, and there's hard dollar savings in terms of the ability to actually reduce FTEs. In our case, it's less than 1 FTE. With the combination of investment advisor and accounting software, and then the cost sharing too. So what we do is we net all of our hard dollar costs from our advisors and the portfolio software, net that against our gross investment earnings, and then allocate that back out to all funds. So all funds share in the cost of having a more robust, more transparent accounting system. And so, the key takeaways, I think Jenny and I, and Jenny, if you wouldn't mind joining me back, is that the, investment accounting software offers several efficiencies, and there are low-cost alternatives to fit any budget. You should investigate your capabilities of your ERP. As Jenny mentioned, her ERP system is able to do the monthly interest allocation on her behalf. And then don't overlook the custody banks, the information that you can get from the custody banks, including market values, bond ratings, and some of them white label enhanced reporting services as their brand, but use an entity like Tracker or Clearwater Analytics on the back end. But Jenny, is there anything else that you wanted to add as a takeaway?
Oh, thank you. You summarized that nicely, Dan. The only thing I mentioned, one of the things that was really important to us with the investment accounting software was that ability to verify our interest income each month and know that it's being calculated correctly and we're receiving it on a timely basis. Yeah, that's the only thing I would add, I think.
Okay. So with that, we want to say thank you not only for watching this webinar, but for staying tuned through the entire set of webinars. We understand this is the last webinar in the series, and congratulations to you for sticking through all the sessions. And we want to thank our friends both at CDIAC and CMTA for putting on a such an expansive free webinar for the community. And I also want to thank Jenny for putting up with me and helping me work through this presentation. So appreciate it very, very much.
Well, thank you for your time today, everyone. Thankful for the opportunity to talk to you. I hope you pick up some things that makes life better for you and your finance department.